Welcome back to XRP Update, your home for the latest XRP news, crypto market updates, and everything happening behind the scenes that could impact your investments. XRP holders, today's update is absolutely wild because while many people are focused on the red candles, the bigger question is why this sell-off happened in the first place. Was this simply panic selling, or is there something much bigger happening behind the curtain that most investors are completely missing? That is exactly what we're going to break down today. The crypto market has been under serious pressure, and XRP was not spared from the volatility. We watched XRP fall sharply, dipping into levels that caught many traders by surprise. At one point, XRP briefly dropped below major support zones before bouncing back with strength. What makes this move interesting is that despite all the fear spreading across social media, XRP managed to recover a significant portion of its losses relatively quickly. That raises an important question. If investors were truly abandoning XRP, why did buyers step in so aggressively once prices reached those lower levels? At the same time, Bitcoin also experienced a significant drop, falling directly into an area that many analysts had been watching for weeks. The move triggered fear across the market, pushing sentiment to extremely bearish levels. The Fear and Greed Index plunged, showing that investors were becoming increasingly nervous about what could happen next. Historically, when fear reaches extreme levels, markets often approach major turning points. That doesn't guarantee a reversal, but it does mean smart investors start paying attention very closely. What makes this situation even more fascinating is the liquidation data. Normally during major sell-offs, we see massive forced liquidations pushing prices even lower. However, XRP's liquidation numbers remain surprisingly small compared to many other assets. This suggests that the majority of XRP holders were not getting wiped out in huge numbers. Instead, much of the selling pressure may have been coming from broader market fear rather than XRP-specific weakness. That distinction matters because it can tell us whether investors are abandoning the asset or simply reacting to market-wide uncertainty. One possible reason for the sudden market decline involves growing geopolitical tensions around the world. Financial markets hate uncertainty, and whenever global conflicts escalate, investors often move away from risk assets. Crypto, despite its growing adoption, is still considered a risk asset by many institutional investors. When uncertainty rises, traders often reduce exposure across the board. That can create sharp declines, even when the long-term fundamentals remain unchanged. Another factor investors have been watching closely is the impact of rising energy prices. Oil prices have surged recently, creating concerns about inflation. Higher inflation could make central banks more cautious about cutting interest rates. And as many of you know, interest rates play a major role in determining liquidity throughout financial markets. When rates stay higher for longer, speculative assets often struggle because capital becomes more expensive. This connection between inflation, interest rates, and crypto continues to be one of the biggest themes affecting markets today. But now let's get to the theory that has many XRP investors talking. Could this sell-off actually be part of a larger accumulation strategy? There is a growing belief among some market participants that large institutions prefer buying during periods of fear rather than excitement. The logic is simple. If institutions believe major regulatory clarity is approaching, they may want exposure before that happens. Creating fear isn't necessary, but taking advantage of fearful markets certainly is. When retail investors panic, larger players often see opportunity. This brings us directly to the ongoing discussion surrounding crypto regulation and the possibility of increased clarity for digital assets. If meaningful legislation advances in the coming months, it could remove a significant amount of uncertainty that has weighed on the industry for years. Markets often move before major events actually occur. Investors buy expectations long before headlines arrive. That is why many people are asking whether the current weakness is actually setting the stage for a larger move later. History gives us some interesting examples. In previous market cycles, major institutional developments were often followed by temporary weakness before stronger rallies emerged. Investors frequently focus on the final rally but forget the periods of fear that occurred beforehand. Markets have a tendency to test conviction. They shake out weak hands before larger trends become obvious. Whether that pattern repeats this time remains uncertain, but it is something worth considering as we analyze current price action. At the same time, nobody should assume any outcome is guaranteed. Markets rarely move in straight lines. Even if regulatory developments become positive, there could still be setbacks, delays, and unexpected surprises along the way. Successful investors understand that uncertainty is part of the game. Managing risk remains just as important as identifying opportunities. That's especially true in crypto, where volatility can be extreme even during strong bull markets. Another interesting perspective comes from analysts who continue studying Bitcoin's historical cycles. Some believe Bitcoin may be following patterns similar to previous years, where weakness during the summer eventually leads to stronger performance later in the cycle. Others argue that today's environment is completely different because interest rates remain significantly higher than they were during previous bull runs. Both arguments have merit, which is why market forecasting remains incredibly difficult. Personally, one of the biggest differences today compared to prior cycles is the macroeconomic environment. In previous bull markets, investors benefited from extremely accommodative monetary policies and abundant liquidity. Today, central banks remain focused on inflation, and financial conditions are much tighter. That doesn't mean crypto cannot perform well. It simply means the path forward may be more complicated than many investors expected at the start of the cycle. Meanwhile, political developments are also becoming increasingly relevant for crypto investors. More candidates and lawmakers are openly discussing digital assets than ever before. The outcome of future elections and legislative efforts could influence how quickly the industry gains broader acceptance. Whether you're bullish or bearish, it's clear that crypto has become a much larger topic within political conversations than it was just a few years ago. Now let's talk about something that XRP holders should find particularly interesting. Ripple continues expanding its presence in Washington, D.C. This move signals that the company intends to remain actively engaged in regulatory discussions and policy development. Having a stronger presence near lawmakers and regulators allows Ripple to participate more directly in conversations that could shape the future of digital assets. That's a strategic move that many investors are paying close attention to. We are also seeing continued growth around RLUSD and Ripple's broader ecosystem initiatives. Developments involving stablecoin infrastructure, payment networks, and settlement technologies continue to demonstrate that Ripple is focused on building long-term utility rather than relying solely on market speculation. Utility has always been one of the strongest arguments made by XRP supporters, and these developments help reinforce that narrative. Looking beyond crypto, global markets are sending mixed signals. Some regions are experiencing strong growth, while others face increasing pressure. Economic conditions continue changing rapidly, and investors must remain flexible. The reality is that no one can predict every market movement perfectly. The best investors adapt as new information becomes available rather than becoming emotionally attached to a single prediction. One lesson that every experienced investor eventually learns is that volatility is unavoidable. Big gains and big losses are part of every market cycle. The longer you stay involved, the more you realize that emotional reactions often create more damage than the actual market moves themselves. Successful investing requires patience, discipline, and the ability to stay focused when others are losing confidence. So what is the real reason XRP sold off? The answer is likely a combination of factors. Market fear, geopolitical uncertainty, inflation concerns, interest rate expectations, and broader crypto weakness all played important roles. But beneath that surface-level explanation lies a more interesting possibility. If regulatory clarity continues moving closer and institutional interest remains strong, today's fear could eventually be remembered as an opportunity rather than a disaster. Nobody knows exactly how the next few weeks will unfold, but one thing is certain. The XRP story is far from over, and the developments happening behind the scenes may prove far more important than the temporary price action we are seeing today. If you enjoyed this update, make sure you smash that like button, subscribe to XRP Update, and turn on notifications so you never miss a major XRP or crypto market development. Thank you for watching, stay safe out there, keep doing your own research, and as always, let's make a lot of money.